Good morning, everybody. Happy Friday in June. Welcome to SKC Office Hours. I'm Sarah Krom, Managing Partner of SKC and Co CPAs. And today we are here for a super important topic on financial planning for college. Just a couple housekeeping issues before we kick off. As with all office hours, this is being recorded. It is available on our website and for download later if you want to revisit it or if any of your colleagues were not able to attend today's session. We will be doing a few surveys throughout the hour to try to keep you engaged and kind of get a pulse of the audience. We have Karen Donaway, our Director of Marketing, on the call. She will be managing the chat for any questions that may come in. We do encourage you to ask questions. We want this to be as valuable for you as it possibly can, and we like it to be interactive. So please feel free to throw some questions in the chat. We did have a record number of pre-submitted questions for this office hours, probably more than any other office hour. So it's certainly going to be an information-filled, fun-filled, packed hour for you. So I'm going to turn it over to our guest, Julie Gross, so she can do a brief introduction of herself. Julie?
Hi, thanks for having me today. I'm Julie Gross with College Financial Consultants. We help families navigate the college financial aid process as their children are applying to college. So really our main goal is to eliminate debt as kids are going to school and try and really gear our clients towards schools that are going to be receptive to scholarships and grants, which is the money obviously you don't have to pay back, which is always more beneficial. I do counsel, though, people on loans and all types of things concerning college financial aid planning. So thanks for having me.
Thank you so much for being here. We are going to start with a quick survey just to take the pulse of the audience. So Brittany, go ahead and throw that on up. Who on this call has a high school student in their lives with college in their future? All right, Brittany, why don't we go and share those results? It looks like we have 50-50 almost on this call of people that have high school students versus people that do not. So very interesting. And of course, Julie, as we talked about in planning for this call, this topic is important for really anyone in the stage of life, parents to be all the way through to grandparents. So I guess let's talk about the sort of the most popular thing that people think of when they think of financial planning or they think of getting ready for college are the two forms, right? The FAFSA and what you educated me on, which is a CSS profile, which I had never heard of before. So just to kick this off, can you explain both of those forms and what they're used for and the respective due dates?
Sure. So there's the FAFSA, which everybody's probably heard of at this point. And the FAFSA is the federal application for financial aid. It is the one application that every school will require when you're applying for financial aid. The CSS Profile stands for College Scholarship Services, and it's owned by the College Board. And I would say over 200 private schools will require that form in addition to the FAFSA. This is a much more in-depth form. So they're going to ask questions about your home equity, your business, even if it's a small business. They're going to ask questions also, though, about debt that you have. So debt will be considered on the CSS profile where it's not on the FAFSA. So that's really important. The FAFSA, though, qualifies families for federal grants and scholarships. And also for schools that don't accept the CSS profile, they'll use the FAFSA to determine your eligibility for their need-based grants as well, institutional grants. But the private schools, over 200, as we said, will look to the CSS profile to determine your family's eligibility. So if you have other children in college, if you have elder care expenses, if you have high medical expenses, those things will all be taken into consideration on the CSS profile, not on the FAFSA.
And what are the respective due dates for each of these forms?
Good question. So both forms are available October 1st of the student's senior year of high school, although they are not due that day. The due dates are going to be really dependent on the application process, meaning early action or early decision. Those applications will be due in November, most likely. But if it's regular decision, it will usually be in January or February. but it also really depends on the schools. So it's important for families to check the school websites. On the financial aid page, they'll have all the deadlines laid out for you.
And do we have to fill both the FAFSA and the CSS profile out every single year of college for our student?
Depends on the school. So many schools that require the CSS profile will just have students submit a FAFSA every year instead of both forms. But there are some schools like Tulane, for example, that will require the FAFSA and CSS profile to be submitted every year.
And how complicated is it to fix any of these forms if we may have accidentally made an error in completing them?
Well, that's a good question too. So the FAFSA is super simple to fix. You can just log back in, make your corrections and then resubmit, and the correction will go to all the schools. The CSS profile, not the same. CSS profile corrections have to be made by hand, and then you have to submit it to each school separately. So best not to make mistakes on the CSS profile.
Understood. So just to continue a little bit of the education process before we jump into more specific questions, can you discuss the difference between scholarship money, grant money, and loan money?
Sure. So scholarships and grants, both considered gift aid, which means that you don't have to pay it back. It is money that the school is giving you, and it comes right off your bill. So if you take the cost of attendance minus any scholarships or grants that you receive, that will bring you to your net cost. Loans always have to be paid back. So there's no, I know a lot of people are like, oh, we'll just take loans, they'll be forgiven. That nothing's been solidified there yet. Don't count on that happening. Know that any loans you take will always have to be paid back. Scholarships, usually we say, are based on the student's merit, their achievements in school, high school, where grants are usually need-based, based on the family's ability to pay. But both are things you don't have to pay back. So we consider them free money.
And we'd absolutely want to exhaust all those free money options before
Absolutely.
we head into the loan side of things. So one of the pre-submitted questions was actually about loans, so I'll kind of interject it here. It was an individual who takes out Parent Plus loans for their child, and collectively, once their son graduates, they'll have about 8 loans altogether. Is there a way to condense those loans into just one loan per child once that student has graduated?
You can consolidate Parent Plus loans. So Parent Plus loans are given by the federal government, and then a loan servicer is a company, that is contracted to manage the loan. So you can always contact that loan servicer to ask if they offer consolidation options. If they don't, there are private loan companies that can consolidate loans for you. And I know my clients have had luck with the website SoFi. To reach out to them and see if there's whatever their options are to consolidate, but it is possible to do for sure.
So you alluded earlier to the possibility of student loans getting forgiven. And I was actually having a conversation with a colleague of mine who herself has student loans, and she had, I guess, consolidated or refinanced them privately. And with all of the news headlines and potential implications that Biden's going to forgive some of that student loan debt, she was very upset with herself that she refinanced that privately and wouldn't be able to take advantage if that does come down the line. But none of us have crystal balls. We do the best we can day to day.
Yeah, I mean, they're saying that the maximum that he'll forgive is $10,000, and then there's also going to be an income threshold to that. So, for the wealthier families that had taken student loans, I don't know that they're going to qualify for the loan forgiveness. And we don't even know when that's going to happen, if it's going to happen. So it's just still stuff in talk right now.
Right. So it really shouldn't be part of any of the college planning process for parents now, because it's just too much of an unknown.
It's too much of an unknown. Exactly. The one thing that we do know, though, is that all loans that fall under the federal family of loans, including the Parent Plus loan, direct loans that the students get, are all 0% interest right now due to COVID relief. And that is to October, at least. I don't know if they're going to extend that, but if you do have parent loans right now, it's 0% until October.
Now, is that forgiven? Is that 0% not going to be added to the back? Is it just, this time period is interest free?
Yeah, for as long as I think it's been for over a year now.
Right.
That nobody's been, the interest has been subsidized, which is nice.
Let's
Excuse me,
throw up.
Sarah, can I
Yes,
just
go ahead.
ask a quick question to
Of
that
course.
point, Julie?
Sure.
So what if you had been collecting student loans from, say, 3 years ago to now? Are they all at 0%, or is it just this year, the pandemic year ones?
I think all loans that are out there, the federal loans, they have not been accruing interest from the time that it was stated until October of this year, at least.
And so for what that means, Karen, just to kind of dig a little deeper, is anybody who is continuing to pay on those loans is paying 100% principal,
That's
which
exactly right.
hopefully will get us to pay those down quicker.
That's right.
Got it. Thank you.
So let's throw up another survey before we go into the specifics of financial planning for college. How many on this call possibly find college admissions and the financial planning behind that to be intimidating? I know lots of our clients kind of put this off to the very last minute that they can do it because they do find it not so fun.
Yeah. Well, that's a lot of people.
So, yep, that's not surprising. About 80% of people find it intimidating. Well, hopefully you're getting a lot out of this call and this will help for future. So let's talk about, from the very beginning, Julie, when is the best time to start this process? How old does the child have to be? And when do we really need to start planning and getting into this process?
Well, from an accounting standpoint, we'll talk about the base year because that's really important. So understand that the FAFSA and the CSS profile will look at tax returns, income information from prior years, what they call it. So prior year would be 2 years prior to the student's high school graduation date. So for students graduating high school in 2022, they'll be looking at the 2020 tax returns. So we want to make sure for business owners, to put through as many expenses as possible that year. We don't want anything that's going to show large capital gains that year. Definitely taking money out of retirement or anything like that should not be done for that base year. We want to avoid anything that's going to increase the adjusted gross income. So that's important. As far as starting the application process, the financial aid application process, generally I start to work with clients ideally late in the junior year of high school, because that's when they start putting together college lists. So for me, I like to make sure that we have a good viable list of schools that the students will be admitted to, importantly, and then, more importantly, perhaps that they can afford. So, if they show me a list that has schools that I know none of which are viable for financial aid, then we need to readjust the list. So that's why it's important to start working a little bit early, with clients, so that we can optimize that.
That list, right, that let's call it the school list, that comes before anything else. We put together that list before we even fill out a single form.
That's true. So kids right now, that are rising seniors, we'll say, have already started formulating their school list. They sit down with their guidance counselor or a college advisor at some point in their junior year, go through, where they kind of are academically suited. And then I can go through that further with them to talk about what their interests are, and then also, okay, we know these schools are not going to be viable for any kind of scholarship or financial aid money. We'll take them off the list and we'll add some more schools that I know are generous. And really it's through my experience that I've learned that.
So let's go back to reiterate what you called the base year, because I think that's really important to drive home, right? And when you talk about the FAFSA being available October of a student's senior year, you're really looking at 2 years prior to that of tax returns that we're looking at. So the planning process of what should the numbers be before we even think about when is the form ready to fill out is really, really important. And unfortunately, a lot of times clients might come to us saying, okay, I need my tax return from this year to fill out the FAFSA, but we did no planning in the year that really matters, which you're calling that base year. So, I really want to just drive that point home for those on this call that essentially, would it be fair to say it's that sophomore year of high school, that tax year that we're looking at for the most part?
I think so. Yeah. I think that's what it boils down to. It's, it's just knowing the base year is important, like I said, to we have families that, and I've seen it all the time. Oh, I wish I didn't take money out of my 401k that year, or, I mean, there are things that happen, but it's, we just like to try and avoid it for that one base year. That is the one year that the schools are really basing that first year that you apply for financial aid is going to be used. Really, that's the most important year that the schools are looking at as your baseline for qualifying for financial aid for future years. So, if you have a reduction in income, say, they're going to be using 2020 income for the 2022 graduates, but maybe you had a reduction in income in 2021. We were going to need to show at least a 20% reduction in income for the school to consider a change in financial aid. So it's important. That base year is super important.
So a lot of our clients are business owners, and sometimes they don't even think it's worth filling out any of these forms because they already have the, presumption that they make too much money and they're not going to qualify for anything. So is there an income threshold that you would advise people not to fill out these forms, or should everyone apply?
Everyone should apply for financial aid. There's a stigma attached to financial aid that is just wrong. So every single person should be filling out a FAFSA at the very least. There is really no income threshold. It's hard to say because there's so many other factors that come into your eligibility for financial aid. And don't forget, these schools get more and more expensive every year. They don't get less expensive. So the threshold goes up every year. I just saw on somebody's financial aid award letter, Columbia University kind of mapped out the next 4 years for you. And by year 4, Columbia is going to be $96,000. So, when I first started doing this, where I had the family that had, maybe an income that was like, 150,000, I was like, oh, kind of borderline. And now I have families that are, over $200,000 AGI with one student in school that are getting need-based financial aid. And if you have 2 kids in school or 3 kids in school, that threshold only goes up from there. So don't believe what your friends tell you, and don't believe in any stigmas. Numbers are numbers, and schools need to fill seats. So it's important.
And a lot of it too, I think, as you alluded to earlier, is it's school dependent.
Meaning,
somebody at a certain income level might not get aid from one school, but could get it from another.
Oh, absolutely. Absolutely. Yeah. So, not all schools are created equal when it comes to generosity. There are many of the state schools that are really popular around here, like Penn State, University of Maryland, that I see on probably everybody's list. And those schools they're just not viable for financial aid or scholarships. It's just not happening. Where you have some of the smaller private schools like Syracuse, which isn't small, but can be phenomenal for financial aid and scholarships. You could actually end up going there for much less than Penn State.
So one of the pre-submitted questions is all about this, and what are the realistic chances of getting financial aid if you own a home, have 2 incomes, and no real debt or financial hardships?
Very good. I mean, and depending on your income, and listen, there are times that a family, maybe the income is a little high, but, there is something called enrollment management. It's important to know schools are businesses. They need families that can pay. So in order to do that, in order to attract those families, they offer scholarship money. So submitting the FAFSA is important for 2 reasons. It's important for families, obviously that need financial aid. And it's also important for families that maybe don't need financial aid, but can show a school that they have the ability to pay. Because like I said, and I've seen it many times, where they'll say, okay, you know what, here's $10,000, here's $15,000, just come to our school kind of a thing. They use it to entice those families because they know once they have those kids there, they're not going to leave. Right. You have a lot of families that might need financial aid that are afraid to apply because they think it's going to hurt their students' chances of getting in. They have the kid there for 2 years and then they pull them because they can't afford the school anymore. And that hurts the school's retention rates. So they want the FAFSA.
So let's get into a little bit more planning and strategy, because what we see very often with our clients are blended families or separations and divorces. Are there specific strategies, whether it's just general overall planning or on the tax filing side specifically, that you can use when you're preparing for these upcoming years to fill out the FAFSA? Are there strategies that will fare better than others in these blended situations?
A good question. And I do specialize with divorced families, so I can speak a lot to this topic. But when a family is going through that, if the parents are living in two separate households, I always advise, especially when we're going into the financial aid process, to file separate tax returns. Even if the parents aren't divorced, you can still file for financial aid separately, which is really helpful in a lot of cases where the custodial parent is being viewed more so than the non-custodial parent. And if the custodial parent has a lower income, that could really be very beneficial for the sake of financial aid. So, the other thing I want to talk about is parents that are remarried or considering getting remarried. Understand that once you are remarried, that spouse's information is going to be required on all financial aid forms. So if you remarry, and I've had this happen, to somebody, a mom that earns $30,000 a year, but married a man that's earning $600,000 a year and totally destroyed any chances of financial aid. So if she had waited just a little bit longer, her student would have been eligible for serious aid.
And does that hold true even if their tax returns are married filing separately?
It is. Both tax returns eventually might need to be submitted at some point, but on the FAFSA, which is what qualifies families for federal aid, they're only going to be looking at the one custodial parent.
And I know sometimes we see some who's claiming which child. Is it the custodial parent? Should it not be the custodial parent? What do you see as far as, aside from whatever the divorce agreement may or may not say, what is really best from a planning standpoint for college?
Well, it's an excellent question. And I've had folks that, call me with this all the time. Like, who should I claim on my tax return? I should claim all the children, just for the sake of this process. And bottom line is, it doesn't matter. For the sake of the FAFSA, it doesn't matter who you claim on your tax return. That's not what's determining the custodial parent for the sake of this process. The benefit to claiming your student on a tax return is the education tax credit. So whichever parent has that student on their return will be able to claim that education tax credit if they qualify for it. If your income, there is an income threshold, which I think, Sarah, you could probably speak to better than me. But if the parent is earning more than $200,000 a year, they're not going to qualify for that tax credit. So it's a wasted credit. So we suggest maybe the other parent take it.
Right. Karen, I saw that you had a question.
Yeah. So a question came through. If they're looking at 2 years prior, but a life change happens in the current year that's going to affect their financial situation, are you stuck with reporting the 2 years prior, even if currently your situation has changed?
Well, that happened to a lot of folks this year, that we were applying for financial aid because we were required to use 2019 tax returns. And as we all know, 2020 for many, many families was a disaster. So there is a process called professional judgment, which the schools can exercise in order to kind of wipe out the prior year income and use your current income information. They're not required to do it, but you can request, and you should contact the financial aid department directly to let them know that you've experienced this change and that you'd like for them to exercise professional judgment. And hopefully they do the right thing. Some schools are going to be nicer than others.
Do you have that list too of the nice schools? I think people would like to know that.
I definitely have my favorites.
So we're going to throw up another survey because we're going to move into talking a little bit about 529 plans and some specific things about financial aid with the respective schools. So on this call, how many parents or grandparents for that matter have 529 plans set up for their children? Okay, so about 50-50. Hopefully that coincides with the first poll, which is the 50 that do have, are the 50 that have the kids that are in high school and not the kids that aren't in high school yet. So let's talk about the change that came out, Julie, with grandparent-owned 529 plans, because I think that that's important for people to know if they may not be aware of it.
So it was always in the past where grandparent-owned 529 plans are not included on the FAFSA, and that's going to stay the same. We never include that as part of assets, grandparent-owned 529 plans. So please make note of that. However, it was that when the grandparents distributed that money for school, that it was going to be counted as income to the student for the year that that money was distributed. And they would have to file a tax return for that, and it would really kind of harm them for financial aid. So we always advise that if there is a grandparent-owned 529 plan, that it be used for the last 2 years of school, junior and senior year, because it would never show up on a tax return or a FAFSA for that sake. But they've changed it so that that's no longer the case. So it's just a 529 plan that a grandparent has, can be used whenever. It will not be counted as income to the student anymore.
That's good to know.
So a grandparent health 529 plan is a beautiful thing.
Let's touch a little bit on what you said there as far as the student and what their earnings or their assets in their names might impact. We focused up to this point really on what the parents' income was, what assets or debt they may have. But how does that play with what the student may earn from a summer job, or what assets may be in their name? Again, maybe we're shifting assets into the student's name, or maybe the grandparents have a trust, or there's some sort of inheritance there. What does that look like from the financial aid process?
Okay, well, this is a good question. So fact is that parent assets are assessed at 5.64% exactly. Meaning that whatever assets you record on the FAFSA, the schools will expect you to pay 5.64% of that amount towards college, which is not a lot at all. So I know I have families that are like, well, I have $150,000 in my savings account. I'm never going to be qualified for financial aid. Not the case. Where student assets are assessed at 20%, at least 20%, which is a huge difference. So 529 plans that are held by parents are counted as parent assets, never student assets. But there are kids that have bar bat mitzvah money, things like that, that will be assessed at, at least 20% when completing a FAFSA or a CSS profile for the student for college. So if you can, before that base year, get that money out of the student's name, put it in your own account, and it'll be assessed at a much lower level.
So many questions just came from that statement that you just made. So that 5.64% right of parent assets, is that net of debt, or is that on the gross asset? So if we have a $500,000 home with a $250,000 mortgage, are we assessing that on the gross of 500,000 or the net?
Not including the home for the FAFSA.
Okay.
FAFSA does not include home equity. So it's really just your brokerage account. So if you have margin or if you have debt against the brokerage account, it's the net of that that's counted.
Is an asset considered a business if they're a business owner?
Business on the FAFSA, it would have to have more than 100 employees.
Okay, so I think
employees, it's not counted on the FAFSA.
I think that's good to know.
Profile, but not the FAFSA.
Right. Interesting. So it's so funny because I think so many people thought it was so good to have things in the name of the student, but that really mathematically is not a good idea at all.
Not a good idea for this, for this purpose. And sometimes, I talk to families and they're like, oh my God, they have younger children and they've been putting money in their names. And we're like, stop, do anything else but that. We don't like to have assets in the student's name. That's, that's a real, sometimes that can be a deal breaker for financial aid.
Right.
So,
right.
Anything that's in, and I know there are a lot of families that have the UTMAs, the UGMAs that were set up, years ago by grandparents with all good intentions. And those are very hard to break up. But, those are counted as student assets, unfortunately.
Yeah. Karen, I see you're going to let us know all these hot and heavy questions coming in because I see the chat exploding. So go ahead.
Julie, what are you doing to us today?
Those percentages just set the whole thing off.
Let's just go back to this 529.
Okay.
Several questions,
Sure.
if you can clarify. So what you had said about the grandparent 529, does the same apply if it's a parent-owned 529? And also with that, should I switch the owner on the 529 to a grandparent plan?
Well, at this point, if you can do that, then that's not a bad idea. A parent-owned 529 plan is counted as a parent asset. So if you have $100,000 in a parent-owned 529 plan, that's $100,000 that needs to be recorded as an asset on the FAFSA. If it's a grandparent-owned 529 plan, $100,000, it's nowhere on the FAFSA.
Okay.
Does that clarify it?
I believe so. Otherwise, we'll get some more questions on
Okay.
that. Does a 401k account count as an asset since it is not considered liquid?
It is not counted on the FAFSA. So the FAFSA, when they ask for assets, they're asking for brokerage accounts. There's going to be a question for what you have in your checking and savings, which we always take the lowest average because that tends to fluctuate for most people. And then as far as the investments, that would just be what you have in a brokerage account. And if you own a vacation home, that would be counted as well.
But those assets could be asked on the CSS profile.
Well, on the CSS profile, it's different. So the CSS profile will ask the value of your 401k, of your IRA, of your retirement accounts, but it's separate from the other kind of investment assets that you might have. So they're assessed differently. On the CSS profile, they will ask about the equity in your home. They'll ask you, how much you paid for your home when you bought it and what you think the market value is, and then the debt that you have against your home. And the net of that will be included as part of your assets on the CSS profile, not the FAFSA. So for folks that own their homes outright with no debt, we suggest maybe to look at the schools that don't accept the CSS profile because your home is not counted on the FAFSA, just on that one form.
Okay. And just to clarify, is SEP IRA considered an asset?
It's considered retirement account. So a SEP IRA would be included on that portion of the CSS profile that asks about your retirement accounts. It's nowhere on the FAFSA.
Okay. And a last question on the 529. If it is a parent 529, should they not use it until the last couple of years, similar to the grandparent 529?
No, 529 you should use. You should use it from day one that they start going to school. A 529, one of the benefits is that, whatever is unused for that first child, can be used for other siblings. So that's always nice. However, if you have 529 money, you should use it for sure.
Especially if it's in the parent's name, it's going to count towards what your availability is as assets anyway.
Right. It's going to count as a parent asset. So it's assessed at that 5.64% with the rest of the money. And if you use it for college, it's going to go down every year, which is nice.
And I think you did touch on this before when you were talking about the difference between the CSS and the FAFSA, but is there a different percentage of assets considered on CSS than FAFSA? Can you just clarify that?
No, it's the same. It's the same. So, the FAFSA uses a federal methodology. It's very centered on your tax return. There's a few things that they'll pull from your tax return to determine, what you can pay towards college. And the students also, if the student filed a tax return. And by the way, students can earn, I think it's up to $6,000 without that income being counted as part of, how they can pay towards college. So I know, Sarah, I think you asked about that earlier, about student income. Students can earn money over the summer. It's not going to impact their financial aid at all.
Right.
Yeah.
So that 5.64% applies to assets on the FAFSA and assets on the CSS, even though they're different assets.
Correct. Yes, correct.
Okay. I think that should button that topic up, Karen. I'm hoping. But please, if it doesn't, or if you have specific questions, throw them in the chat, because this is important and we want to make sure that you walk away with the clarification that's going to help you and your family. So let's assume we've made it through this process, right? And we have our financial aid letters from the respective schools, and we don't like what they say. Is it possible to appeal them? I mean, let's discuss a little bit about the likelihood of success there and what that process looks like.
Sure. So two types of appeals. If you're appealing a need-based award, meaning a financial aid award that includes need-based grants, you're appealing to the financial aid department at the school directly. You're going to reach out to them directly. In order for that appeal to be successful, I like to be able to show a change since you've applied for financial aid. So there needs to be a change in circumstances, like Karen asked about earlier. If there's a reduction in income, or if there's been illness or high medical bills, or elder care expenses, or something that was not reported on those financial aid forms since you applied, that's something that you would be able to appeal with directly to the financial aid office. You can also use schools' financial aid award letters that might have given you more money, leaving you with a lesser family contribution. You can go back to a school with that and say, hey, Loyola University left me with, a lesser family contribution. What can you do for me? And many times schools will come up with a few $1,000s more, which is awesome. If you're appealing a scholarship, a merit-based scholarship, that would go to the admissions office. So merit-based scholarships come from admissions, not financial aid. And that's important for the student to understand, and for the student to reach out to admissions with either better grades since they applied, a better test score, some accolades, maybe awards that they've won or something like that, that can maybe have them be reconsidered for a merit-based scholarship. But appeals, most part, are pretty successful. This past year was so weird in every way with admissions and with financial aid. I know schools were over enrolled this year. It was just a mess. A ton of kids were waitlisted, and I've been told that those kids are not coming off waitlist, which normally they would. This year was very unusual, where our appeals are usually very successful. We're really not for the most part this year. I think they were like, listen, we've got, a waiting list a mile long, if you don't want to come, don't come. So it wasn't as successful this year, but hopefully we will be back to somewhat normal next year.
It is a possibility. So it's really about being proactive and sort of advocating for your families in order to go through that appeal process.
Listen, if you get another $1,000, $1,000, always worth a try.
Right.
Yeah.
Right. So let's take a small left turn to talk about athletic scholarships, because when we were planning for this call, you actually had a really interesting statistic about sports and college money, which was that less than 2% get money for sports for college, which, is such a small number. So, I mean, what do you advise parents who are committed to the fact that their student's going to get a sports scholarship to pay for their education? And, those of you who have young kids in sports, the time and the commitment of all of that, and hopefully it'll pay off. But yeah, the money. So speak a little bit, if you could, about the likelihood of athletic scholarships and what we can do or not do as far as planning for that.
Sure. So athletic scholarships are hard to come by. Like we've said, 2% of students will receive some form of athletic scholarship when applying to college. Athletic scholarships can mean many different things. So D1 schools, right? D1 sports, we all know about. Those schools do have quote unquote athletic scholarships to give. The coaches receive a bunch of money from the school to disperse to students how they see fit. Know that the only kids that are getting like a full athletic ride scholarship, or a full ride, I should say, are schools that are D1 schools for revenue generating sports like football and basketball. That's it. Soccer, lacrosse, great sports, but you're not getting any kind of full ride for those sports. You might get 10 or 20% off of your tuition, which is phenomenal. But that's also, D1 schools. D2 and D3 schools rely more on need-based money or merit scholarships. The coaches will work with the schools, with the school's financial aid office to put together a package for attractive students. They're not going to be, athletic scholarships. It's going to come in the way of merit money, but it's money that's there, but it's not going to be a full ride by any means. So understand that, and understand, when your child is going to a D1 school, that is a huge commitment. They are owned by the school. I mean, they are going to be doing that and that only. So it's important to understand that, what that means to a family.
So in our planning call for this, you use that same term, revenue generating sports, right? And you said basketball, football for the bigger schools. So, it seems to me, at least in what you said, that the boys have a higher probability than the girls do because women's sports tend to not be revenue generating to the same extent. Is that fair?
Well, yeah, I mean, women's basketball is, believe it or not, but it's definitely more for males are going to benefit from that a lot more, unfortunately, but yes.
Yeah.
So a question came through on that exact topic. Would girls have a better chance because of Title IX of getting scholarships?
I'm not familiar enough with it to speak on that. I'll be honest. Yeah, I'm not sure.
We do have another question that did come in through the chat, which is, can you discuss anything parents of twins can do to improve their chances of financial aid?
Yes, mom of triplets here, so yes, I can. Having 2 or 3 go to school at the same time is going to be beneficial for financial aid, for sure. A family having 2 children in college, it's a huge burden. I mean, it's just a huge financial commitment. So there are schools that, there are many schools that look at that, and you will be more eligible for financial aid than you would be with having 1 in school. So there's no schools like giving discounts for twins if they both go. But your family is definitely more eligible for financial aid having 2 in school or 3 in school at the same time.
So no buy one, get one free deals that you know of at any schools?
No. They're filling seats. Your kid's filling a seat. That's it.
So we talked a lot throughout this call about what you referred to as need-based scholarships or need-based money. We talked on the high end, right? Is there an income amount threshold that parents shouldn't apply and fill out the FAFSA? But on the needs base, is there a range of income that someone could be on the lower end that may qualify for that need-based money, or is that school specific as well?
It is school specific. Like I said, I think, there are some schools that are definitely more generous than others. But I mean, it's so hard to say, an exact number because there's so many factors that go into determining a family's eligibility for financial aid, for need-based financial aid. I mean, you can have a family that's earning, close to $400,000. If you have 2 kids in school, you're going to qualify for financial aid. Given that the assets are in line, I should say that.
Right.
Because that's always something too. But yeah, I do have families that, definitely have income on the higher end that are receiving financial aid.
Interesting. And the same question, I guess, on the merit scholarships. Is there a certain GPA? Is there a certain SAT score? And we're going to touch a little bit on admissions and testing before we wrap up. But
well, that's going to depend on the school also. It's important to know the schools on the very top tier, the Ivy League schools, and schools like that might not be considered Ivy. Don't give merit scholarships at all. 0 merit scholarship. So if you don't qualify for any kind of need-based aid, you're going to pay full price at those schools. You are paying the sticker price. But if you have a student that's that great, maybe look at the schools at a tier below, because those schools will offer phenomenal scholarships. GW has always had a $25,000 presidential scholarship. Northeastern, $30,000 dean scholarship. These are things that that are given to the top students in the applicant pool. No extra applications required, no extra essays required. They want those good kids. It helps their statistics. So that's what they'll use those funds to attract those kids.
So Julie, I imagine you're working very closely with the parents, right, from a financial standpoint, and then you obviously have to work with the student as well as far as making, the list of schools and things like that. Are you ever in a situation where you actually counsel them not to pay for college, versus the benefit of them coming out, the high cost of college, and maybe a community college is better for the first 2 years? What are your thoughts on that in certain situations?
Well, I think that that's really specific to the student. If students are willing to do that, that is a fabulous way to go through school. You want to, if you're going to do that, look at the community colleges that have very good transfer agreements with many of the four-year colleges. Some community colleges are better than others. They do have more transfer agreements, so that's something to pay attention to. But yeah, if you can go to community college and pay, $7,000 a year for school for 2 years and then graduate, you can still graduate from Cornell. Why not do that? But it has to be a student that wants to do that. There are kids that want to get out there and just have that college experience for 4 years, that unfortunately community college can't offer. But if that's not a big deal, then definitely I highly suggest that.
So what have you seen? I guess you talked earlier about it was a weird year, right? What are the changes that you see or have seen or upcoming in the application process, the acceptance process, and the financial aid packages that you've seen come through during the COVID period?
Well, when I say it was a weird year, I'm saying because I had so many students that just did not get into a lot of their school choices. I think it was highly competitive this year. We've heard from the schools that most of them received record numbers of applications. And I think a lot of that came from the test optional policy, where kids, maybe they didn't think they should apply to, some of the better schools because they couldn't get the high test score, did apply. And these schools did get crazy numbers of applications. But I think they looked at different things this past year rather than just test scores and GPA. I think they looked at character. They looked a lot at the essay, a lot at the uniqueness of the student, and what they can bring to campus. I think that really played a heavy role this year. And I think it's going to be an ongoing theme, and also I know diversity was a very big factor this year. Schools are looking to diversify their campus. And that's it's very important. So it's, there were some nice changes. It just didn't, I guess a lot of students were pretty disappointed. But then I had students that, made out great. They got into their dream school and everything worked out. But it was definitely it was unpredictable. We'll say that.
What do you see for next year and in future years as far as that waiving of the testing requirement? Do you think that that's something the admissions office is going to keep up with, or are we going to see that go back to pre-COVID situations?
Well, it should be interesting, right? I know the UC schools are dropping it. They're dropping test requirements completely. So that's something that's, that's in California, but it's, that's a huge school system. And, so it could be an ongoing trend. There is for those who are struggling with tests, there is an organization called fairtest.org, which is a movement really trying to get schools to drop the test requirement. To be either test optional, where you can submit your scores and they will be considered, or if you don't want to submit your score, they don't have to, and they'll consider other things. Or test blind, meaning that regardless of whether you submit a test score or not, it's not going to be considered. So fairtest.org is driving this movement to have schools do this, and there are currently over 900 schools that don't require test scores. So
I imagine that upsets the College Board.
you think so? Like they might need to rebuild their whole business model. But yeah, that's a good point. But for students that are struggling, parents can check out fairtest.org for a list of the schools that are test optional or test blind, because there's so many that you probably don't even realize.
And one of the questions that came through on the chat, which is in line with this conversation, obviously the switch to remote learning for many of the students in high school in the past year has affected, their ability to learn, sometimes their grades. Are you seeing, or do you expect colleges to take that into consideration in any way? How can we as parents of students or the students themselves in the application process kind of share that with the admissions office? What are your thoughts on that?
I mean, I think it's, it could be part of a discussion, maybe part of their essay. But I mean, it's a fair question, a lot of kids struggled with it and, but then a lot of kids did very well with it. It was definitely an off year. I think schools do take that into consideration though. And I think that they are pretty understanding of what these students went through. So can only hope that they are somewhat sympathetic to the students.
Right. So just to wrap up with one final question that I have for you, and then I'll open it to the audience and let you give some final thoughts. We talked about the new FAFSA form that is coming out. It is in draft form, so this isn't finalized yet, but I did want to kind of touch on this because it ties into the taxes and the financial planning. And I just wanted it to be on people's radar in case it does actually go through the way that you mentioned it would. So can you talk about it? It's a change, I think, for the 2023-2024 FAFSA.
Just been changed. So that's now going to be for 24-25 FAFSA.
Okay.
So a little bit more into our future. And what they're saying now is they're going to start rolling out some changes slowly. I think they're reevaluating, and I think they got a lot of feedback as to some of the changes that were to come. Like part of that was going to be no longer considering the number of children in school for eligibility for financial aid, which is crazy because that is a huge factor for a lot of families' ability to pay for school. So to take that out of the equation is just senseless. And there were some other changes that I think they're reevaluating. I think it's going to be a very slow rollout. Whether it's going to really happen for 24-25, I don't know. But I know I'm, seeing a lot of articles that they're having some issues with some of the changes they were trying to implement.
I would hope that they don't make those changes, because I know when we were talking, some of the proposed changes were about, the alimony piece and divorced parents and child support, and it didn't seem to be
an asset. Yeah. I mean, a lot of that doesn't make sense to me. So, we'll see what happens. I'd love to talk about it, but I really don't know that a lot of this is going to actually come to fruition. So I know they're trying to simplify the form. It was like 130 questions. They're trying to break it down to something like 80 questions or something like that. And listen, simpler is always better, but if we're going to take some things out of the equation that actually really matter, then that's problematic.
right.
Yeah.
So I will open it up to any final questions in our last handful of minutes for the audience to put into the chat. But in the meantime, while we're waiting for those, Julie, any final thoughts or words of wisdom, recommendations for those of us on the call today?
Yeah, I mean, before assuming that you don't qualify for financial aid or that this process is a waste of time, speak to a professional that knows, because I've had that happen to a lot of folks. And now this time of year is when I get calls from people that are like, oh yeah, my student's going to Villanova in August. Can you help me apply for financial aid? Where deadlines have passed, and I don't know that they're going to be considered for financial aid. So don't assume that you don't qualify. Definitely keep track of deadlines. Don't wait until the student is accepted to apply for financial aid, because most likely we will have missed deadlines. I guess those are important things to mention.
Great, terrific, thank you. Karen, any last questions that I may have missed in the chat? Are we good to wrap up?
No more in the chat, but just one final question for you too, Julie. Can you just go back to the, when you fill out the FAFSA, I know you said you can always go and make changes in that and not the CSS, but how important is it to get the FAFSA right the first time as opposed to, the subsequent years? Is there a connection between them? Not just going back and making a change on, one for something.
Well, yeah, I mean, the problem is if you make a major mistake on the FAFSA that first year, that might disqualify you for aid, like recording parent assets in the student asset section, and you're not qualified for financial aid, the chances are you won't be considered for the second, third, or fourth year, knowing that they already have your student, you've already paid, you obviously have the ability to pay. You want to avoid mistakes that first year the best that you can. You want the school to understand that, if you are in need of financial aid, this is why. It makes more sense not to have mistakes on the FAFSA, obviously, that first year.
Great. Thank you so much, Julie. This has been so eye-opening and helpful. I'm sure everyone's going to get off this call and call their parents and tell them to move the 529 into their name, because that was a huge takeaway from today, and move all of the assets out of the student name, because that 20% is terrible compared to the 5.64 for the parent. So some really important gems on here. I want to thank you again for joining us this morning. Thank you to our audience for participating in all of your questions. I hope this was valuable to you. Again, it's going to be available on our website, and Karen will send out the link once it's been uploaded. Please feel free to reach out to us if you have any future topics that you want to hear about that we haven't covered yet for the next office hours. And I want to wish you all a safe and happy weekend, and we'll see you next time.